Hey there, and welcome. Today, we're going to peel back the curtain on a super common but really powerful pattern that you can find on pretty much any financial chart. It's called the fair value gap. So let's just dive right in.
So I want you to think about a price chart for a second. It's not just a bunch of lines, right? It's really a story of this constant tug of war between buyers and sellers. Every single candle, every little wick, it all means something. But what if the most important clues are actually in the empty spaces?
It's kind of like prices on an express elevator. You know when it shoots up or rockets down so fast that it just skips a bunch of floors? Well, when that happens, it leaves behind a gap. And that skipped floor? Well, that's the footprint we're hunting for. It's a moment where the market was totally one-sided.
And you know what? That footprint actually has a name. We call it a fair value gap, or FVG for short. Now, don't get hung up on complex formulas or anything. At its heart, it's just a simple three-candle pattern. It's a signal of a temporary imbalance, a kind of inefficiency in the market. And spotting these is huge because they show us exactly where the most aggressive moves went down.
All right, so how do you actually spot one of these things? You know, it's way easier than it sounds. The whole pattern is literally built from just 3 candles in a row. Let's break down the anatomy.
Okay, here's a super simple 4-step process for you. First, you've got to spot a really strong, energetic price move. That's your first clue that something big just happened. Then, you isolate the 3 candles that are part of that move. Now here's the key. You're going to look at the wick of the very first candle and the wick of the third one. And if there's a clear, empty space between them, boom, you just found a fair value gap.
All right, let's dive into the first type. This is what happens when price just jumps up with a ton of force. We call this a bullish fair value gap. Okay, take a look at the chart. This is a perfect example of the pattern. See those 3 green candles? That huge upward burst from that middle candle is exactly what creates that highlighted space. That's the gap itself. So let's break this down. That first candle, that's our setup. Candle number 2 is that massive, powerful push to the upside, and the third candle just continues that momentum. But the really crucial part is the gap itself. It's that empty space between the very top of candle 1's wick and the very bottom of candle 3's wick. Okay, so for every action, there's an equal and opposite reaction, right? Same thing here. When price drops down with that same kind of aggressive energy, it forms a bearish fair value gap. It's basically the mirror image of what we just looked at. So now, let's focus on the other example. See those 3 red candles? That massive drop from the middle candle creates the exact same kind of inefficiency, just in the other direction. That highlighted red zone, that's our bearish FVG. And the breakdown? It's just the flip side of what we just saw. You still have your setup candle, then that powerful move, but this time it's downwards, and then the continuation. The gap is that space between the bottom of the first candle's wick and the top of the third one. Putting them side by side like this makes it crystal clear, doesn't it? On the left, you've got your bullish gap from a strong move up, and on the right, the bearish gap from a strong move down. I'm telling you, once you learn to see this pattern, you can't unsee it. It's all about that space left behind. All right, so we've covered what they are and why they happen. Let's wrap this up with a really simple, actionable checklist that you can use to go spot these for yourself. Okay, so here's your 3-point checklist to take with you. First, look for a clear 3-candle sequence. Second, make sure that middle candle is big and powerful. I mean, it should really stand out. And last and most importantly, confirm there's a visible gap between the wicks of candle number 1 and candle number 3. If you can check all 3 of those boxes, you found an FVG. So you gotta remember, these aren't just empty spaces on your screen. They're clues. They're footprints that were left behind by big, fast-moving money. And they tell a really clear story about a moment of extreme imbalance. And you know what? The market often seems to have a memory for these kinds of footprints. And that brings us to a final, really interesting question. We always hear that markets try to find balance, right? So now that you can clearly see these moments of imbalance, these footprints, what do you think the market might try to do about it? Definitely something to chew on. Thanks for tuning in.